Hey everyone, welcome back to the Chain Reaction Podcast. I'm your host, Tom Shaughnessy, a co-founder at Delphi Digital, an independent research boutique providing institutional-grade analysis on the digital asset market. One quick housekeeping item, this podcast is strictly informational and educational and is not investment advice or a solicitation to buy or sell any tokens or securities or to make any financial decisions. For full disclosures, please see the show notes below. Also, our listeners can visit Delphi Digital and use coupon code ChainReaction, all caps, as a special offer to access our research. The top crypto funds, analysts, and firms read Delphi Digital's research and analysis. With that out of the way, today I'm thrilled to have on Nelson Chu, the founder and CEO of Cadence. For those new to Cadence, the company is described as a technology-driven securitization platform connecting retail and institutional investors with short-term structured private credit investment opportunities. Basically, Cadence is using blockchain technology to open up this private credit market to smaller investors, using the technology to automate share fractionalization and distribution and simplifying the origination process while reducing costs. So let's walk through a quick example so that nobody's confused going into the interview. The platform's pretty simple. Accredited investors today go on their website and can invest in various private credit opportunities. Let's say an Amazon merchant is projected to do $1 million in sales next year. An investor can go on the site, buy a structured product that extends a portion of that projected $1 million to the merchant in financing. The deal then gets tokenized, and investors get tokens in their wallet, and once the deal matures, it gets paid back with their principal plus interest. This type of opportunity was really only available to institutions, even though the credit market itself is $1 trillion market. Cadence is a very interesting company attacking a mega market using blockchain technology. With that, let's jump into the episode with Nelson. Hey everyone, welcome back to the podcast. Today I'm thrilled to have on Nelson Chu, the founder and CEO of Cadence. Nelson, how's it going?
Good, how are you? Thanks for having me.
Yeah, it's a pleasure to have you on. So Nelson, let's jump right in. How did you get started in crypto?
It's an interesting question. So believe it or not, before this, I actually ran a strategy consulting firm that helped really early stage founders build their companies from the ground up. And so we were doing very traditional, I would say, startups, right? So mobile apps, web platforms, things like that. And then I was introduced to Zach Prince, who is the founder and CEO of BlockFi. And so he came to me saying, hey, look, I have a really cool idea for a lending company for crypto. And I believed in him. I believed he could actually pull it off. And so he was the one who, we did some initial work with him. They've done a fantastic job. And so he got me into the blockchain space, and then here we are.
Yeah, I've actually had Zach on. I think what he's doing is incredible. He's been able to basically build out financial services for crypto. That's amazing.
Yeah, we've been huge supporters of everything they've been doing ever since the very beginning. So.
Yeah, that's awesome. So give us the rundown on Cadence and what you're building.
Sure. Cadence is the leading digital securitization and investment platform for private credit. So private credit is something that a lot of people probably don't really quite understand, but it is probably one of the most important asset classes in this economy today. So if you think about the example I always like to use is you go to Whole Foods, you buy a granola bar, right? And so the granola bar company who got that purchase order from Whole Foods actually probably was not normally able to make that originally. Right? And so if you think about it, like let's say Whole Foods gives them $1 million order, they usually need about $400,000 in cash to make that order and fulfill that order for Whole Foods. So these guys have options. They're usually, let's say they're based out of Brooklyn, they got started 2 years ago, a bank won't give them money, and so they go to these specialty lenders out there who can actually factor against those invoices. So invoice factoring is a core component of private credit. Merchant cash advances are a core component of private credit, and so it really runs the gamut of anything that's kind of a little more esoteric than what traditional debt looks like. And so we saw that there's a huge gap in this market where it's completely opaque. There is literally nothing about that market that is transparent. It's all done via Excel, phone calls, and emails. And so you can really kind of use the concepts of blockchain technology and apply it to private credit to bring transparency and efficiency to the space like never before.
That's amazing. So just to clear this up, you guys aren't competing with any of the STO platforms like Securitize, Polymath, or any of the ICO platforms, anything like that?
No, I mean, the reality is we're doing our own issuances, right? And so that's a really core differentiator. And so I've always held, it's almost like you think about Apple versus Google, right? So Google is basically saying, I will give you all the tools, you can build on me, you can do whatever you want, right? Apple's basically saying, I will control the experience from end to end. And so for us, we are hyper selective about which originators we partner with. We're hyper selective about how we structure these products, and we control the user experience as well from start to finish. And so I wouldn't really put ourselves in that category in terms of securitized and the like.
That's awesome. So is there anybody today doing what you're doing for private credit?
Not to the best of my knowledge. I mean, so the reality is, there's non-blockchain companies like Yield Street and those guys that are obviously offering various different private credit alternative investments on their platforms. But the reality is, we thought that there's a real opportunity here to create a more unique offering that no one really has before. So if you go on Yield Street right now, you can see, they have various different investments in like vessel deconstruction and real estate and litigation financing and things like that. That's great. But their stuff is generally, a lockup of like a year, 2 years, even 3 years, right? And so that means that you have to park their cash with them for 3 years sometimes. And so we said, look, that shouldn't be the case, right? Like everyone right now, what they want is liquidity. And so liquidity is paramount. STOs are saying, you'll have liquidity by trading with us. The reality is that unless there's real demand for that asset, you're not really going to get liquidity out of it, right? So we said, let's structure the shortest duration instrument on the market, and you get inherent liquidity because you just get out of the investment. And so on our platform right now, we have 1 month, 3 month, 6 month, 9 month investments that you can make. And so after the end of each month, for example, you can decide whether you want to roll it over to the next month or you want to pull it out. That optionality is totally up to you. And so on average, let's say you invest for a month, you'll get 0.8%, which normalizes to about 10% annual returns off of these investments we have on the platform today.
That's incredible. So just to clear up, this is not just for, is this just for credit? Like, what are the areas? Is it accounts receivable?
Yeah, so that's technically all covered under credit. And so when you factor against accounts receivables or you advance against accounts receivables, that's all part of the private credit umbrella. Right now it is strictly just a private credit platform, and it's for good reason, honestly. So private credit as an asset class has grown about 20% compound annual growth rate since 2000. It is the fastest growing asset class in private capital markets. It's outpaced PE, private equity, which has grown by 9.3%. And so it's attractive in its own right, and there's a lot of demand for it. So why not build assets and structured products that people actually are looking for?
Yeah, no, that makes a lot of sense. So switching over to Cadence's platform, where are you guys in the life cycle on building this out for investors?
Sure, absolutely. And so we have been in private beta since the end of January. And so we did our first public, semi-public issuance in a private beta, if you want to call it that, on January 24th, and that went through. And so we've done 8 issuances in total since that time. And we've done $4.67 million worth in total of issuances. Every single one of these deals has been oversubscribed because, again, where else are you going to get 1 month, 80 basis points of return? So the option to keep going or take it out, right? And so on average, our investors have actually invested in multiple deals. So about 40% of our investors have done 3 or more deals that we've kind of structured and issued, which is great. So clearly people love it. We went live with the public platform already recently, so that launched this week. And so we're excited that we have really unique offerings out there right now that people can look at.
Turning back to how people access this market traditionally, are you offering them higher returns, lower returns? Are you making it more accessible? Like, what is the main 1 or 2 selling points versus the way traditional people access this private credit market?
Sure. So, our mission is alternative investments for all, right? So today, you actually have to generally be an institution to access these types of investments. You need to be able to commit enough capital. You need to be able to find these opportunities. The average investor can't find these opportunities at all. And so they're stuck with stocks, bonds, mutual funds, ETFs, and the like. There's been definitely growing interest in the alternative space. And so the success of Yield Street tells you sort of that there's a lot of people looking for these types of investments. And so our goal is to make institutional caliber or institutional grade investments available for retail investors.
That's incredible. So going back to how you expect investors to get involved with the platform, are we funding our Cadence account with cash, Bitcoin, Ethereum? How do we?
Yeah, so I guess honestly, if stablecoins were actually stable, you could fund it with stablecoins. Since they're not, if you think about it, like if even one of these stablecoins goes up or down by a penny, that can wipe out your 80 basis points gains for a month, right? And so it's not stable enough for us to use. So right now, you have to use cash to be able to fund it with fiat. But we will hopefully move to a point where you can actually fund it with various different stablecoins that are out there.
That's incredible. So looking at the beta launch, I guess, what were the most unexpected things you and the team saw from the launch? Were there any red flags or curveballs that happened? I'm sure there's some.
That's a good question. Honestly, we were surprised by the amount that people trusted us with. And so, we had investors, both institutional and retail, were finding us from Google AdWords, right? And they put in 25 grand, 50 grand, 100 grand off of an untested platform that was, running a couple deals. So I think that is a testament to our design team. At the very least, I think we do have a very well-designed platform. But outside of that, it's in the quality of the products as well, right? And so we spent 5 months building out a legal framework that could actually let us issue these types of securities at scale. And so that's a testament to our structuring team and our legal team who've been able to pull this off and clearly convince very savvy accredited investors that these are worthwhile investments to put hundreds of thousands of dollars into.
No, that makes a lot of sense. And I guess turning back to the broader market here, hunting for yield is growing, I think, a lot in crypto. You have BlockFi, which you just alluded to, 6% on Bitcoin. I think it's down to 3% on ETH depending on your tier. But you also have to compete with all the staking options, everything from Loom to Tezos to Decred. Where do you think do you think you compete for investor money there because, say, I have to fund my account versus stake with something else, or do you think it's a bigger pie?
I think we go after the more conventional alternative investment private credit market, right? And so if you look at our platform right now, if you log in and sign in and create an account, you do get a wallet address, right? And so it's a wallet that we manage the private keys for, but it's because we have an equal representation of a real world transaction to a digital transaction. So for example, when you invest in a deal, you actually get the security token coming out of it, right? ERC20 token. And so right now you can actually go on to Etherstand and see every single one of our issuances and who invested in it anonymously, because the wallet addresses are private, obviously. And so it's there if you want to engage with it, but our average demographic is probably not as familiar with crypto, not as familiar with these types of staking options that can actually generate returns. Our average investor is probably more akin to the one that looks at yield stream. And so the reality is, I think, to be fair, we've gotten actually some very interesting investors who love crypto, who love the fact that we are offering security tokens here, but it's not the majority at the very least.
Yeah, no, that makes a lot of sense. And I feel like the market may be much bigger for you guys considering, the percentage of crypto that can be staked today isn't a huge number, but the traditional market size for traditional private credit is huge.
It's a $1 trillion market. Yeah, and right now there's $367 billion sitting in cash waiting for deals to invest into. And so that is really the market we're going after. And I'm really excited about that opportunity.
Wow, that's incredible. So I guess switching over to Cadence as a business, how does Cadence make money? Is that not an objective right now, or how do you plan to in the future?
So we were revenue generating from day one, right? And I think that's fantastic. A good spot to be in, at the very least. And so we charge a structuring fee off of every single issuance that we do. And so the originators that we work with expect to lower their cost of capital by working with us, right? So when they have an existing hedge fund facility that they're getting, call it like 15 or 16% on that they're getting charged, we can bring that down to like 12. So their all in is like, call it 10 to 12%, right? Depending on the quality of the asset or the risk of the asset. And so our fee is about normalized over the course of a year because the investments roll over every month or every 3 months, about 1%. And so we take 1% off of that before it even gets syndicated out.
Got it. That makes a lot of sense. So, you talked earlier about the spread, the 80 basis points. How much of the cost plays in there, like versus traditional costs, if that's the right question? I guess, are you guys charging less for what you do than traditional?
Yeah, we should, because the reality is, retail has never been able to access these types of investments, right? So a hedge fund is designed to make a lot of money. And so that's why they can get away with charging these originators 15, 16, 18, 20%, right? And so we open this market up to retail investors who never had access to any of this type of yield before, and they're happy to take 10% or 80 basis points over a month. That is, unheard of for them and what they originally normally have and have used before.
Yeah, that makes sense. So let's back up and go back to the crypto sphere for a second. How does Cadence play into blockchain and crypto? I know you alluded to it before, but I guess let's just walk through the process of where you interact with the blockchain.
Sure, it's actually, it's two ways. So we talked about the output, which is the digital security, right? And so we do issue ERC20 tokens for every single one of these securities that we issue for investors. They get it in their wallet, and they can see what they invested in. The reality is that we'll get to a point where there is every single thing that they transact with on our platform whether it's depositing money, withdrawing money, redeeming these tokens, all that will be tracked on the ledger, right? And so we'll have a fully public accounting system of record for every single thing that a user has done, which is pretty cool. It's a level of transparency that never existed before in private credit. Outside of that, like I was mentioning earlier, this entire industry has thrived off of opacity. It's thrived off of Excel, and I think it's survived in spite of Excel, phone calls, and emails. And so there has never been a single source of truth for all this asset level performance data. Right? And so what we're building is an immutable ledger that effectively can track the performance of the asset from the moment it was ever structured all the way through the maturity of the actual performance of the asset itself. And so we become the central source of truth for all asset level performance data in private credit.
That's incredible. And I guess the question is, if these are ERC20 token outputs, they can be traded freely on exchange, or are there restrictions in place?
So we file a Reg D exemption right now with all these offerings. And so the reality is that you normally would have to hold it for a year. But like I was mentioning earlier, you need to have assets that people actually want to trade. Right? And so our thesis was, let's just create a 1 month asset. You might as well just hold on to it and let it redeem itself, right, before you actually think about even trading it. We have enough origination volume or asset volume in the pipeline to structure a multi-year security that could be traded if we want to. But we haven't seen demand there. And there's, so we're going to create a product people actually want to invest in. And that's right now all short term.
That's incredible. So I'm not as tuned into the entire process, but it seems as though the transparency and the auditability and the whole roadmap that you provide is much more clear than it has been done traditionally. Are you able to attract better deals because you're able to share all this information in real time, or is there a difference?
You're able to actually price better, right? So the reality is today there's a lot of assets and products that are being created that are probably mispriced. They're either more expensive than they actually are because it actually is riskier than it seems, or it's way cheaper than it actually should be for these originators because their assets are safer than people think they are. And so our job is to kind of make that transparency possible through our ability to surveil these assets better. And so, I think the transparency is really in the assets themselves.
No, that makes a lot of sense. And going to the target client here, are we targeting Whole Foods? Are we targeting 7-Eleven? What's the goals here?
Yeah, so we underwrite and assess the risk of every single one of the originators we partner with, right? So the reality is, if we were to go after a specific role of our company, for example, who had an invoice from Whole Foods, the amount of effort it takes to verify them and underwrite them is the same as underwriting a company that extends capital to all of these different granola bar companies. And so we work with the companies that extend capital to all the granola bar companies because it's just more efficient on our side. And so there are hundreds of thousands of these specialty finance shops out there that we partner with.
Wow. And you said you did 8 issuances total, 4.6 million, I believe you just stated. What are the, not demographics, but what's the information on these 8 deals? Are they basically all the same, the different companies?
Yeah, so we securitize cash flows coming out of a basket of assets, right? And so the first originator we worked with, we only chose one for the private beta because it's extra legal fees to be able to be on more. So within that private beta, it was an Amazon merchant cash advancer, effectively. And so they found Amazon merchants. They kind of algorithmically predicted what they would do in revenue from Amazon over the course of a year. And they advanced a portion of that revenue, and then we advanced a portion of their advance, effectively. And so that was the focal point of all 8 issuances thus far. But now that the public platform is live, there's a variety of different originators on there to choose from, with different durations as well, including the one that we just mentioned.
Okay, so I feel like a lot of crypto companies have entered the space basically building derivatives or financial services on top of what we already have, and then hoping to compete with traditional finance. You guys, I feel like, are competing with traditional finance, but using blockchain and crypto to your advantage. So I feel like you guys already have product market fit and you're making it better versus a lot of other companies which have no idea what their product market is.
That's a great way to put it. I think it comes from the fact that our management team has about 75 plus years of financial services experience, traditional financial services experience. And so, and I'm coming from a startup background as well. It's product market fit is the most important thing you could possibly ever do, right? And it takes your company off the ground, it helps it scale. And so we're learning every day what our investors are looking for. We're learning every day what our originators are looking for. And we're improving that each time. But the reality is we have a product that's sticky, a product that people are actually looking for, and now it's time to get creative and do even more than we have today.
No, that's incredible. So do you think that, do you feel that competitive edge against traditional players you're up against, or is it more friendly, or to be honest, are you not on their radar yet because you just launched?
I would say anecdotally, I think we are on their radar and they're a little bit intrigued by how we were able to pull it off. 5 months of legal work will help you with that at the very least. But I think the reality is, we're fighting for a very large share of the pie, right, in terms of when it comes to private credit. And we need to be as creative, as innovative, as progressive as anything else that's out there to continue to stay ahead of the pack. There are several assets that we have that will be coming up, hopefully, in the next couple months that no one's ever done before, and in a structure that no one's ever done before. And that in itself will be also a massive market that I think will continue to maintain our edge from the traditional incumbents.
And those potential deals, I mean, everything here sounds to me like this is more institutional based than retail based. I mean, I'm sure retail investors would love to get 10% on their return, or, on their capital. But I feel like you guys are going to attract a lot more institutional players. What's your thoughts?
Yeah, that's very true. I mean, honestly, institutional is what makes retail possible, right? So the reality is, most of this $367 billion is institutional capital from pension funds, endowments, things like that, right? And so they need a place to put capital into. They can't just put $1 million at a time. They need to put $50, $100 million at a time. And so our ability to kind of structure these unique issuances that can fulfill that makes it possible for us to carve out a portion of that for retail. So these guys retail investors are actually investing alongside institutional investors for institutional grade investments. This is probably the clearest seen in the fact that we are actually also the first digital asset to ever be listed on Bloomberg. And so our strategy is pretty clear, right? We know we need institutional capital here. We know it's going to be what it'll take to scale. And so that you might have seen that in the news last week when it came out that we are now assigned a FIGI, or financial instrument global identifier, for each one of these issues that we ever do. And so for institutional investors, if you don't exist on Bloomberg, you don't exist at all as an asset. And we knew that going into it, right? And so we worked hard with the Bloomberg team, the FIGI team at Bloomberg, to be able to get these digital assets listed so that makes our life easier in terms of sourcing institutional liquidity.
So the Bloomberg news is super interesting. You're here, you're showing me how it works in real time. Basically, you have Cadence on Bloomberg Terminal. You have all your deals listed. Walk us through how impactful this is and what it looks like.
Yeah, absolutely. So our assets and our products technically look like what's called asset-based commercial paper. So commercial paper was something that was, a GE, for example, had a commercial paper desk back in the day that they can actually basically get. They say I need $30 million in the next couple of days, and then a bank comes in and swoops in and says, here's $30 million, and you got to pay us interest on this, right? And so it looks like commercial paper because the maturity is all under a year. Okay. And so our stuff, obviously being short, ultra short duration, looks most like asset-based CP. And so we are in the Bloomberg terminal under the money market category because it is based on duration, sub 1 year. You can find us by looking for our parent ticker of the issuer itself, which is Cadence Group CDGRP. You can find it at the individual issuance levels. For example, like I was mentioning earlier, each issuance that we do has its own unique identifier. And so once you find that issuance, you'll see everything related to that deal itself. The maturity, the yields, the series name, the potential involved parties. So for example, our Amazon merchant cash advancer is actually listed as the involved party in here. And the most important and unique part of that is that in the notes section, you actually see the Ethereum contract address on there. And so now it's the first time that a digital asset has, with an Ethereum contract address, is listed on the terminal for discovery, alongside the term sheet and everything else that's associated with it.
That's incredible. So I know we talked about this offline, but if you were to issue a note, say for 500 grand for AR for a bunch of Amazon suppliers, they would all then get some of that money, slowly pay it back, and that would be in essence the investor return. And then that token would be listed on Bloomberg itself.
Yeah, the token actually, so what happens is when we create an issuance, right, we let Bloomberg know, they create the identifier and the description page for us. And then that's during the syndication marketing period, right? So normally it's taking about 5 days on average to close each one of these offerings thus far. And so once that period closes, we get the final amount raised, and we also create the token as a result of that. And so we send them the updated information about both those things, including the term sheet, and then they update the description page with the Ethereum contract address.
That's incredible. And these tokens trade and have normal prices just like everything else?
No, so they're not tradable, right? So these are under 30 days, or 30 days, 3 months, whatever it is. And so under the exemption, they can't be traded until after a year. The reality is, again, we can structure longer duration securities. A lot of these loans that we're extending, a lot of these cash flows that we're securitizing are for loans that are done up to 2 years. Right? So we can go to a 2-year duration if we want to, but we've found that the investments have resonated the most when they're shorter duration. So our 9-month issuance took the longest to close. Our 3-month issuance took less than the 9 months, and our 1-month issuance, a lot of them haven't gone out to the public after rollover because everyone wants it and they want more.
No, that's incredible. So I got a couple of rapid fire questions for you. I guess one of the first ones is, why did you decide to build on Ethereum?
So it is by far, I would say, the most flexible, and also Etherscan is probably the most friendly explorer out there. And so, from a pure optics and visibility standpoint, we want people to ultimately use this, right? Like, yes, it's kind of tucked away. Yes, we don't want to scare people because it has a blockchain or crypto flavor to it. But the reality is that they will get more and more comfortable with it over time. And I think Etherscan has done a really good job of being the most approachable out of all of them.
No, that makes a lot of sense. I think that Ethereum definitely has the most infrastructure built out. It's easiest, but there's a lot of competitors out there.
We're completely agnostic. That's the beauty of it. So we can be agnostic based on the type of asset that we're doing. So, for example, if we have a high-frequency trading asset, we'll use a protocol that is more suited for that. If we have something that's more like a derivative, we can use a protocol that's more suited for that. So the beauty of what we're doing is that we will pick the best protocol for what we need at that point in time. And right now, Ethereum is actually just the best one. That's what we saw at the very least.
So next up is, tell us about your raise, and also tell us if you have a token or if you don't, and why.
Yeah, so we have many tokens, none of which are actually ours. And so we do issue tokens for our digital securities for each one of these offerings that we create for investors. But we ourselves as a company do not have one. We raise money the old-fashioned way through good old VCs. And so the group that invested in us has been a really interesting group. And I think they were all strategically chosen. And so Recharge Capital is a multi-billion-dollar Chinese family office. They have a portfolio company that includes Cadre, DB1, Walla, RigUp, CareUp, heavy fintech focus outside of CareUp. And so they've been a fantastic investor. They led that round. And so we're a good company there in terms of different portfolio companies that they have. We also had Coinbase and InBlockchain invest in us. And so they've been great partners as well. And there's a lot of opportunities to potentially work with them, things that we're doing. We also had Argo, which is a public insurance company. Their corporate venture arm invested in us. And so there's a lot of opportunities synergistically to work with them to create, credit enhancing products in conjunction with them to be able to supplement what we have here, make it even more institutionally friendly than just being listed on Bloomberg. We had Fantail Ventures invest in us, and then outside of that, every single other strategic angel that came in is a current or former C-suite executive from the buy side and sell side. And so if you want to kind of see where our roadmap is headed on the institutional side, look no further than our cap table of angel investors on here.
Yeah, that's probably one of the most impressive cap tables I've heard for a company starting out of your size.
Thank you. Yeah, I mean, it was definitely a labor of love to figure out, who to include and who not to include. It's never fun to turn down money from people, but the reality is, we need to be very careful about who we take money from because it sends different signals to the market, right? Especially in traditional finance, and so you don't want to alienate yourself from anybody at this point in time. And so we've taken very, very, I would say, holistic and friendly approaches to who we brought on.
So for your crypto peers that are starting companies right now that have that high quality problem where there's too much interest or they have to turn people away, what advice would you give them?
I think do what's best for your company in the long run. Right? At the end of the day, I think honestly, some of the investors that we turned away now want to get in even more, and so there's nothing wrong with saying no to an investor. But you have a fiduciary responsibility to grow this company the right way. And the last thing you want is for an investor or a partner who doesn't quite understand the business, get into bed with you and you realize a year later that this is not going to work out, and it's just more painful down the line. So, insofar as you have as much visibility as you can into the future of your business, find the right people that you would want to stay with for years and years.
That's great advice. So, dovetailing into investors, into your team, tell us about the Cadence team and how you assembled this pack.
Yeah, it's I've been very fortunate that having worked on the strategy consulting side prior, you get to know some really great people that you've worked with over the years, and now it's just a matter of convincing them to leave it all behind and join you on your mission, right? And so I'm thrilled at the team that we've been able to pull together. Our CTO has about 20 plus years of experience, having been at Fortress and a couple of macro hedge funds, being the CTO there at those hedge funds. Our head of risk in capital markets was formerly at UBS, doing 10 plus years in debt capital markets. And so he's got the most domain expertise in what we're doing today. Our head of business development has raised $3 billion over the course of 6 years. And so sourcing institutional liquidity is the name of the game here. And then our head of operations used to be at a blockchain VC. Prior to that, she was managing a family office. And so, it's a fantastic group, and I'm thrilled that they've joined me. I feel very privileged that they decided to leave it all behind and join us here. I don't take that for granted every day.
That's awesome. And your team is stacked, clearly, investors as well. If for some reason you had to double your team tomorrow, where do you think that you would put those resources? Growth, operations, where would it be?
I think the classic startup answer is engineering. And so the reality is there are a lot of things that we need to build for this platform and also for all the other various different things that we need to actually do to help facilitate this process from start to finish for securitization. And so, it would definitely be heavily on the engineering side. But I know that, from an operations standpoint, my head of ops is definitely going to be wanting some help on her end to manage all the customer inquiries that we get who are interested in investing in our offerings.
No, of course. And one of my last questions for you, Nelson, you alluded to BlockFi earlier. Zach, if you're on here, I love the UX you guys have built. It's so easy. Walk us through what happens when somebody logs in. How easy is the user interface? Is it 5 clicks, 100 clicks? Is there a KYC AML process? I think there is. How does that all work?
Yeah, absolutely. So we try and make it as pain-free as possible, right? And so when you sign up, we don't ask for a ton of information. It's your name, email, phone number, password, nothing too crazy, right? We are for accredited investors only, so you do need to indicate that you are an accredited investor before you can get through. After that, you can just browse all the offerings on the platform. You can't make an investment, though, until you're formally KYC AML. So that part of the process needs to happen. But at that point in time, depositing funds is just one click, connect your bank account, and then tell us how much you want to deposit, and then it'll be in your account in the next couple of days. Right? And so keep it really simple there. We create the wallet address for you if you want to do that. Right? When you make an investment, after the money has cleared the account, it's in your Cadence balance. You make that investment, you commit to it, you sign the subscription agreements for a conventional alternative investment process. You'll see once it clears, the tokens get issued to you, the transaction ID is there. You can go to either scan a seed on your wallet and see it actually happen. So it's all there if you want to engage with it. If you never want to see it at all, you honestly don't have to see it. So it's as much or as little as you want to see all the blockchain scenes, things behind the scenes.
It's a very pain-free process for such an old traditional market coming of age. And do you guys handle like the custody and the wallets, or is it my wallet? Where does that all sit?
So the funny little thing about securities is that there's always an underlying paper contract tying it together, right? And so we know for a fact that there cannot be any movement of these transactions before maturity. There's no trading, right? And so if there is a hack, if someone decides to steal tokens out of somebody's wallet and move it into their account, we have every single second prior who actually was supposed to own it at that point in time. We have a paper contract that tells us who's actually supposed to own it at that point in time. And so if that does happen, we just restate and create a new contract that reflects, new paper contract that reflects the new digital contract, and then tie those two together and burn whatever else was there before. And so with digital securities, that sort of flexibility and luxury that you have, it's not like a traditional crypto where there's going to be forks, there's going to be decisions that need to be made and things like that. That doesn't really happen here.
And going to the issuer side, how easy is it for an issuer to interact with the platform, not the investor?
Yeah, again, the investment bank to legal has made this really easy, right? So right now, it takes about 15 hours of legal work to bring on a new originator onto the platform. And then every single time we issue a new security from that originator, it's 2 hours of work. And so that is unheard of in securitization. It's the reason why we can do 30-day rollovers.
What is that compared to the traditional world? That's 17, let's say 15 hours. What is that compared to traditional?
Conventional securitization for the much larger scale is like weeks, right? It could be even a month. So it's not pain-free by any means. The structure that we've created is hyperscale for what we need to do, and that's why we've made it possible.
I mean, just the legal costs here, 15 hours compared to weeks, you're opening the market up to everyday investors that need
Absolutely, and that's why we can offer $500 minimums too, right? And that's also unheard of in alternative investments.
That's incredible. Let's switch over. My last question here, competition. Are you more concerned with, let's say, crypto native startups? I do that in quotes because you guys are basically, you already have an existing target market that you're making more efficient, or are you more concerned with the traditional players maybe getting more efficient, maybe because they're Goliaths in the space and they have huge books of business?
Yeah, I think the reality is you should never discount anybody, right? And so I think the crypto players are in that space for a reason, and they're very innovative, right? So traditional players tend to be a little slower. They have the balance sheet to be able to make things work, and so you should be scared of them for that. But the crypto players are going to continue to be come up with creative solutions to compete in the space. So I'd say I view them both equally, honestly, and we should be cognizant of all of them. And how do we stay ahead of them is going to be sort of the biggest challenge facing us in the coming months.
It's amazing. Nelson, last question for you. I'm going to start asking everybody, who is the smartest person in crypto? And I get this is subjective. It's a very hard question. I know people want to jump out and pick a few, but I guess who is your crypto idol?
Interesting question. Honestly, because he brought me into the space, because he is a dear friend, I'm going to say Zach Prince is my crypto idol, and a thank you for everything that he's been able to help us do as well.
That's incredible. Nelson, it's a pleasure having you on, and I will see you probably around lunch or across the street from each other.
Sounds good. Thanks so much for having me.
Hey everyone, thanks for listening to the episode. If you learned anything, please share the episode on Twitter and LinkedIn. Feel free to tag us and visit delphidigital.io to learn more about our research.